Beneath the red deserts of Western Australia, a quiet boom is unfolding. Shipments of gold are surging out of Perth's ports at a pace not seen in decades. Central banks, hedge funds, and private buyers from across Asia and Europe are racing to secure Australia's bullion, the one commodity that's holding its value as currencies wobble. In just 1 year, gold exports are projected to hit 60 billion Australian dollars, overtaking gas and ranking second only to iron ore. And if you look closely at who's buying, you'll see a story about trust, power, and the shifting foundation of the global economy. Welcome to Geo Capitalist, the channel where we decode how nations build wealth, power, and strategic influence. Today we will explore how Australia's gold just became a $60 billion lifeline. A deep dive into how this quiet resource boom is transforming global finance, reshaping trade routes, and redefining what safe assets mean in an uncertain world. If you enjoy breakdowns like this one, make sure to subscribe and turn on notifications, so you never miss how the next global power shift unfolds through economics, not headlines. Australia's gold sector has exploded. Government forecasters project a $60 billion in gold export earnings for 2025-2026, up from roughly half that only a few years ago. The reason isn't production, it's demand. Investors, central banks, and sovereign funds are searching for tangible security in an age of unstable currencies and geopolitical fragmentation. While lithium, gas, and critical minerals dominate political headlines, gold has quietly become Australia's silent powerhouse, now the nation's second-largest export after iron ore. Every major global uncertainty, from inflation spikes to de-dollarization, channels fresh capital toward bullion. Behind this surge is confidence. Australia offers transparent markets, political stability, and reliable auditing, qualities that make it a safe source for large-scale buyers. Global institutions prefer Perth and Sydney's refining network because each bar can be digitally traced from mine to vault, an assurance unmatched by many other producers. The World Gold Council recently ranked Australia as the second-largest gold producer on Earth, supplying over 320 tons annually. Yet the real story lies in the refinement process, a network of advanced facilities turning raw ore into globally recognized investment-grade bullion. The result is a market built on both credibility and scale. With global debt exceeding $300 trillion, investors are fleeing paper assets and rebalancing toward real ones. Gold, once seen as a hedge, has become a strategy, and Australia sits at its center. The country's geological abundance and institutional trust have made it the world's safe haven mine, exporting not just metal, but monetary confidence itself. The trade data and the pattern is unmistakable. In 2023, Australia exported nearly $29 billion in gold. Its top destinations were China, with $8.6 billion, Hong Kong, $5.9 billion, and Switzerland, $5.3 billion, three nations that dominate the global bullion ecosystem. Together, they account for almost 70% of Australia's total gold exports. Each hub serves a distinct purpose. Hong Kong operates as the re-export gateway to mainland China, where consumer and institutional demand has remained resilient despite global slowdowns. Switzerland, home to the world's largest refining centers, processes Australian gold into smaller bars and coins before redistributing them to banks, ETFs, and wealth funds in Europe and the Middle East. China, meanwhile, is hoarding gold at a scale unseen in modern history. Its central bank has added over 225 tons since 2023, signaling a deliberate move to diversify away from U.S. Treasury holdings. Smaller but growing importers, Singapore, Japan, and the United Arab Emirates, form a parallel corridor, reflecting a broader shift in global finance. These markets increasingly act as storage, trading, and reminting hubs for physical assets as digital currencies remain volatile. Interestingly, Canada appears only modestly in the data, underscoring that the boom is overwhelmingly Asia-driven. Still, secondary trade through Swiss refineries means Canadian institutions indirectly handle Australian-origin gold through ETFs and central bank reserves. In short, as economies hedge against inflation and financial weaponization, nations are accumulating gold and turning to Australia for reliability, traceability, and purity. Its bars have become a new global benchmark, flowing eastward as quietly as they are essential. At the heart of this transformation stands the Perth Mint, one of the world's oldest and most trusted refineries. Established in 1899, it has grown into a cornerstone of the global bullion market, refining roughly 330 to 350 tons of gold annually. In October 2025, the Mint reported gold product sales at a three-year high, 85,603 ounces, marking a strong rebound in both retail and institutional demand. These figures reveal a structural reality. When markets grow volatile, buyers move toward authenticity. The Perth Mint's refining chain, from mine certification to bar serial tracking, provides exactly that. Each gold bar carries a unique digital identity, allowing banks, funds, and even private investors to verify its origin instantly. The process begins deep in Western Australia's goldfields, where ore is extracted, smelted, and transported under some of the world's strictest logistical controls. Once refined in Perth, bullion moves eastward through Fremantle Port, loaded onto vessels bound primarily for Hong Kong and Shanghai. It's an invisible choreography of trust, a silent trade connecting remote Australian mines to the world's financial capitals. Every shipment is audited, insured, and logged, ensuring a level of traceability rarely achieved in other commodities. Beyond refining, the Perth Mint also plays a role in financial innovation. Its Gold Pass digital certificates and backed ETFs allow investors to hold fractional ownership of physical bullion securely stored in Western Australia. This blend of physical and digital access has attracted both institutional and retail investors, driving higher turnover and liquidity. Ultimately, the Mint's precision and transparency make it the engine of credibility behind Australia's gold export boom. It's not just producing metal, it's producing monetary trust in a world increasingly uncertain about what value really means. Why the sudden appetite? Because gold is outside the system. It doesn't depend on interest rates, it isn't subject to sanctions, and it can move quietly across borders, beyond the reach of financial pressure. For governments seeking stability, that makes it priceless. China's central bank, the People's Bank of China, has added more than 21 tons of gold this year alone, continuing a two-year accumulation streak that began in 2023. The total now exceeds 2,250 tons, marking one of the largest sovereign holdings in the world. Other Asian and Middle Eastern banks, from Turkey to Qatar, Singapore, and India, are following suit. To them, gold is not just a hedge, it's insurance against currency risk, inflation, and geopolitical fragmentation. In 2024, global central banks collectively purchased over 1,000 tons of gold, according to the World Gold Council, a record level of accumulation in the 21st century. Each ounce refined in Australia represents stability that paper assets can't guarantee. It's pure, traceable, and conflict-free, attributes that matter as governments and investors seek assets immune to digital freezes or debt crises. Even private institutions and high-net-worth investors are stockpiling bullion in Singapore and Zurich, betting that this silent currency will outlast political cycles. The pattern is unmistakable. When global confidence weakens, gold becomes the currency of trust, and Australia has become the world's most dependable mint. For Australia, the gold surge means more than profit. It means resilience. With LNG prices softening and several critical minerals projects facing delays, gold has become the stabilizer of the national trade balance. It's keeping export income strong at a time when other resource sectors are struggling to meet forecasts. Mining regions such as Kalgoorlie, Newman, and Leonora are witnessing renewed investment in exploration, processing, and energy efficiency. Automation and low-carbon refining are reshaping production methods, reducing costs while aligning with Australia's climate commitments. Every shipment of bullion strengthens the Australian dollar, stabilizes employment, and bolsters government royalties that feed infrastructure and education funding. Global finance is also taking notice. Hedge funds, sovereign wealth funds, and ETFs are pouring capital into new refineries and storage hubs near Perth, Darwin, and Karratha, anticipating that demand from Asia will continue through 2030. Meanwhile, the government's Critical Minerals Strategy 2023 to 2030 now treats gold as part of a broader national resource security plan, integrating supply chain transparency, export auditing, and digital tracking into every stage of trade. In effect, gold isn't just a commodity, it's a policy instrument, sustaining growth, protecting currency stability, and anchoring investor confidence in Australia's future as the Indo-Pacific's financial anchor. The new gold rush is not a throwback to the 1800s, it's a strategic transition. For decades, Western economies relied on the US dollar and treasury bonds as safe assets. But as interest rates fluctuate and debt surges, emerging economies are quietly hedging that dependence by building reserves of physical gold. As central banks diversify from paper to metal, Australia's role expands. The country's neutrality, transparent governance, and environmental compliance make its bullion politically clean, unlike gold from conflict zones or sanctioned states. That trust factor has turned Australian gold into a monetary bridge between East and West. This transformation gives Canberra soft power leverage. Every ounce exported reinforces Australia's reputation as a dependable trade partner, one that can supply value, not volatility. In trade negotiations with the EU, Japan, and India, that credibility translates into better market access and long-term contracts across energy, minerals, and technology. The global gold cycle now mirrors a wider economic reality. Power is shifting from financial centers to resource producers who can guarantee ethical, stable supply. By anchoring its exports in accountability and innovation, Australia has become not just a supplier of metal, but a guardian of monetary confidence in an age of uncertainty. But no boom is without pressure points. El Niño patterns threaten water access in mining regions. Higher energy costs squeeze refinery margins. If global interest rates fall sharply, speculative demand for gold could cool. There's also the risk of overdependence. If prices correct, revenues could dip as fast as they climbed. That's why Australia is investing in value-added processing and digital verification tech to lock in premium margins even when cycles turn. Add to that regulatory scrutiny on ESG and traceability, which can delay permits and raise compliance costs. Logistics bottlenecks at ports like Fremantle and congestion on east-west freight corridors can stretch delivery times and insurance costs. A stronger AUD can weigh on exporter margins even when dollar gold prices rise. And global central bank buying, a key support, could slow if inflation abates or growth stabilizes. Mitigation looks like this: expand refining capacity, diversify shipping routes through Darwin, Singapore, Hedge FX, and energy, and push mine-to-vault certification so Australian bars keep a pricing premium regardless of spot volatility. Gold has quietly become Australia's economic lifeline, a tangible asset in an increasingly digital, uncertain world. It connects remote mines to global vaults and ties Australia's fate not just to commodities but to monetary policy itself. As nations shift from financial instruments toward hard assets, Australia's reliability makes it the trusted vault of the South. This isn't a rush driven by greed. It's a renaissance driven by risk management, strategy, and foresight. The bigger picture: gold revenues stabilize the trade balance, fund infrastructure, and anchor investor confidence when other sectors soften. They also elevate Australia's soft power, credible supply, clean provenance, and rule of law trade that partners can bank on. By pairing bullion with digital custody, ETF rails, and traceability tech, Australia turns metal into a modern financial product. That's why Australia's gold has become a $60 billion lifeline, not only for miners and funds, but for a global system searching for something solid to stand on. And there you have it. If you found this breakdown valuable, check our next video and comment below. Do you think the global move toward gold is the start of a new monetary era? Your thoughts guide what we explore next. Until next time, stay informed and stay ahead with Geo Capitalist. Thanks for watching, and see you next time.